Thanks, Liam. Well, as the New York Times puts it, some of the world's most extensive internet messaging and social media are attempting to succeed where the crypto startups have failed, which is taking digital assets to the masses. So joining me now on the line to discuss is Alexander Geralis, CPO at cXchange. Alexander, thank you so much for joining us on the line today.
Always good to be back, Jessica.
It's great to have you back on the line. So we're going to jump straight in because this has been one of the biggest talking points over the weekend. How important is it for the crypto market that Facebook launches a stablecoin on a platform that billions of people use daily?
Jessica, I think it's very interesting. Obviously, we had signs of this last year. You know, they started hiring blockchain developers and whatnot. So kind of we could see it coming. How important is it in terms of the market? I think it's really important because it will drive adoption. But if you're hoping that, you know, it's going to pump the price or something like that, probably not so important. More of people having, you know, blockchain used every day in an app that they're already using. I think that's pretty good.
Right, so it's more of a kind of a use case perspective as opposed to directly impacting the price. What's interesting about this as well is if we look at Facebook over the past 2 years, there has been a lot of talk of Facebook's trust violations. Will Facebook users still trust the social media platform, especially when it comes to using crypto?
Yeah, indeed, they've had a fair share of scandals. We have to kind of remember that nothing is free. You know, even though Facebook seemed free, what is happening is that they have a revenue model that's based on using your data and selling it for marketing purposes. Now, some of that data was used perhaps in a way that they didn't make so transparent to users, and it really hurt them. You know, they really had a tough year with their stock, and stock was even in courts and whatnot. Unfortunately, I think people they like ease of use over privacy. So it might not be, you know, as private as we'd like. However, I don't see let's say the more classic crypto enthusiasts being so bullish on this because, you know, they value the privacy and the pseudonymous aspects of some privacy coins or Bitcoin and things like that. But getting crypto into the hands of people is good, and it's not anything new, actually, because we've seen this with Wechat since 2014. They had a digital wallet, and you know, you could send money instantly to other Wechat users. They've got over 300 million people. So it's not something new. It's something we've seen in the East, but it definitely is a good idea to, you know, kind of bring it to bigger and more global companies.
And you made a really interesting point there that some of the longer-term standing crypto enthusiasts, they are criticizing Facebook, saying that this it won't be permissionless and it won't be decentralized. Are we expecting this to still spur wider adoption, even though we have had some criticism for people that were in the space and have been in the space for quite a while?
Definitely, it will not be decentralized because it's run by a company, you know, such as Facebook. We don't really have a lot of information on what kind of blockchain they'll be running it on. And even then, it might be based on a certain public blockchain, but then it will be a private blockchain, which probably makes sense for them. But as of yet, we don't really know. Now, in terms of adoption, I think it's great. And I like what Andreas Antonopoulos says. You know, the way that we don't all really know how TCP/IP works, but we're all using our computer. And that's kind of where we see things going. Eventually, a lot of applications will be using blockchain technology, and we won't even know it. You know, it's just going to be the way that the app works. And this is, you know, it's a first step in that direction from a big company like Facebook.
And I guess that is what people would consider as one of the final points of mass adoption, is people not even knowing they're using this technology, but it being integrated into their daily lives. If we look at Telegram, for an example, because Telegram is quite an interesting use case here, it's become the kind of the de facto communication here, especially in the crypto space. Are we seeing that the Telegram, the TON, is more used, it's more adopted now because of this, or not really?
Yeah, indeed, Telegram had that massive ICO, which was, I think, private for the most part, and it caused a lot of noise at the time. And there are, you know, most of the people that are interested in crypto are very active on Telegram. They're very active on Twitter. Now some of them are kind of moving to Discord. So there will be adoption, but I think we're talking about a different kind of adoption than we'll see from Facebook. Facebook, you're getting a crypto-based currency into the hands of people that are not used to owning crypto, whereas the majority of Telegram users probably have owned a crypto, or they're a lot more aware of cryptocurrencies. What is interesting is that if they're going to be pegged, if they're going to be fiat backed, and they're going to be stable coins, or if they're going to allow speculation, like that might happen with the Telegram currency, then you could get a lot of noise with that, and people might take the opportunity to trade it, and that'll just create more hype for it.
And I think when we look at the potential numbers here with Telegram, with Facebook especially, if we look at Bitcoin as an example, Bitcoin has a massive over 50% market dominance. Are we seeing that these social media cryptocurrency platforms will have the potential to even potentially overtake the likes of Bitcoin?
To overtake the likes of Bitcoin in terms of market cap, even in terms of market cap, I don't really think so. And in terms of, let's say, people holding it, again, I don't think so. They're very different. And I like to use the Wechat digital wallet as an example. It's simply a means of easily and quickly transacting. It's not so much a classic cryptocurrency that has the pseudonymous aspect, that has kind of a privacy aspect, that has a store of value. For the people that argue Bitcoin is a store of value, it's more about ease of use and getting people to transact directly with each other through the app.
Okay, and now if we move on and look at money laundering, which still obviously remains an issue with cryptocurrencies as a whole, Japan has made some of the biggest strides in stamping out crime. Why is fraud such a constant problem globally?
Problem because it has to do with money and power, and people like to get away with it. Unfortunately, the kind of people that are using banks and these large institutions, they know how to do it. Just as an example, I looked at banks and the kind of fines that they're going to get, and that was discussed in the past 6 months. So UBS is going to get a fine for about 15 million for money laundering. ING is going to get a $900 million fine, and Danske Bank, which is kind of the behemoth right now, they have, some clients have laundered over $200 billion worth of money through Danske Bank, and they're only going to get a fine for about $8 billion. So it's always going to happen, in banks and with cash, and it probably even happens with cryptocurrencies. But laundering via cryptocurrencies is very, very problematic, because now all the gateways in and out are getting bottlenecked. They have KYC and AML, and it's a constant problem because it's not just money, but also people want to launder these large amounts more for power. I don't even think it's about the money anymore. And if we look at the recently announced AML D5, so the anti-money laundering 5th directive, they've extended it to also cover exchanges, to cover currencies, and interestingly enough, to cover wallets. So I think it's only a matter of time before even just to have your own wallet on your phone or on your desktop, you're going to have to go through AML KYC for that as well. So it's going to make it more and more difficult. And it doesn't make sense because everything's stamped on the blockchain. So unless you're using some privacy coins, which again are questionable because they've been through an exchange, it's getting more and more difficult. Now, you mentioned Japan in there, and they did announce that there's a tenfold increase of laundering attempts with cryptocurrencies. However, it's still under 98.3% of the money laundering cases. So, it's really just a fraction. I think there's much better ways and much more anonymous ways to launder money than using something like Bitcoin, which it's stamped on the blockchain forever. You can't undo it.
And you made an interesting point there, because a lot of high-level executives have actually slammed Bitcoin and cryptocurrencies, saying that they're used for illegal operations. But these figures actually demonstrate the contrary. In this case, aren't digital assets used for less illegal activity than fiat currency?
Yeah, indeed. There was a lot of people from a traditional financial background or regulatory background that were quick to point out how cryptocurrencies are used for illegal activities. which did take place. It had this massive sin period. You know, there was activities buying and selling on the dark web using Bitcoins. But since Alphabet was taken down, you know, it kind of became proof that it's not the best way. And as we said earlier, things are stamped on the blockchain, and it's not anonymous, it's pseudonymous, so eventually it can come back to you, even if it takes years. You know, once the connection's been made to who the wallet owner is, there's nothing you can do, really. So we have kind of graduated from this sin period, and I think people have realized that, yeah, it's not really as good a tool as people kind of pointed the finger at for illegal activities and for money laundering and whatnot. But yeah, it's still cash is king. You know, nothing's more anonymous than cash.
Good point. And now just finally, Alexander, because we have spoken about a range of topics today. Now, most analysts are predicting further losses for most of the top cryptocurrencies. Nobody really delves into reasons for the continuation of this bearish trend that we have been seeing for a while now. Is there any way to explain why the bear trend continues to threaten this market that we are in?
Sure, I can give you, you know, my personal, what I see is that in general, there's not a lot of volume. And although from the beginning of the year to now, there have been like healthy bursts in volume, it's still not sustained volume. So we had, you know, in February, we had those 2 high volume days and where the price spiked a lot. But since then, it's kind of, it's been going down, and it doesn't really have this sustained volume that we were used to seeing in 2017. At the same time, there are big orders going through. I mean, just last week I saw a few orders that on an exchange, not even OTC, right, that were both well over 100,000 and 2 more that were over 180,000 USD, and these were on the spot market. So we do see more activity than we were seeing, let's say, 3 or 4 months ago, but it still needs time, and it's like a ship. You know, it takes a long time to turn and get in a new direction. So instead of being very positive when you see a small price spike, I think rather focus on the big picture, and that might be, you know, zooming out, looking at your monthly charts, your weekly charts, then your daily charts, and from there you can zoom in and look at hourlies and whatnot. But don't start looking at the 10-minute chart and think, you know, we're done the bear trend and we're up in a bull trend.
You were saying there about the ship turning direction. Do you have an indication of when you're expecting to see the markets turn around? Is it this year? Could it even potentially be 2020, for example?
Turnaround, I think we definitely will have a larger range this year. That doesn't mean that we'll get over 5, 5.5, 6. If we break 6, then that's definitely, you know, very healthy. But we can probably range between 3 and 5 for a little while. And remember the last bear market, you know, after 2013, it kind of like that 250 range stayed for months. There still is opportunity in that. Like, this is now a trader's market. It's not a hodler's market. So if you trade and you capture the differences, you know, price up and price down, especially with a bit of margin or even just in spot, then you can still make money. But it's become, you have to know what you're doing more now than you knew in 2017. However, that being said, Jessica, I see a lot of activity in the mid caps and the smaller caps. So they are moving. Now, it might not be the best idea to trade those for dollars because let's say the value of Bitcoin might go down. And even though you've made a profit in BTC versus else, maybe you didn't make a profit versus USD, or maybe you're break even versus USD. But for the traders and there's many people like this, their goal is just to collect more Bitcoin. Yeah, the opportunities are there. You just have to find them.
Fantastic. Well, Alexander, thank you so much for joining us on the line. It's always a pleasure to get your insights. Thank you very much for your time today.
Thank you. Have a good day.
Thank you too. Well, that's all from myself and Alexander. We'd love to hear how you found this interview. Please share your thoughts with us on all social media on BloxLive TV. In the meantime, it's back to you in the studio, Leah.
Thank you, Jessica. And that is all from us here at BloxLive TV today. I'm Leah Heilpan, and you can get in touch with us on social media to give us your thoughts on today's biggest stories. But for now, we'll see you tomorrow.